Hey there, what's going on? Just doing a quick video here for you guys on my screen. So the subject for today is did you know that not having a 700 FICO will cost you $5,171,757? Just so you know where I get that information from. So if you basically you can actually go to here. This is on my website, quickply.com/credit center 2. And what we have is kind of a screen here for all the different products: mortgage, auto, insurance, credit card rates. So obviously, here in this day and age, this is filmed in August of 2020. We've got the pandemic on our hands, so the mortgage rates are a little bit lower. Well, maybe quite a bit lower than they've been in a while. But even if you can get, a mortgage with poor credit, you're gonna pay a lot. For today's example, we're going to use 9.5 because this is what the visual is on our credit center. And it is a good visual because, again, it includes auto loans as well as credit cards and mortgages. The best excellent rate we have here is 3.9%. But the spirit of the exercise is to understand exactly how much money you pay in interest over 30 years. Now, obviously, there's some variables with this that kind of throw the math off a little bit, but really the spirit of this exercise is to show you, really what that true value is of the cost, variation from the absolute worst credit score to the absolute best credit score. So if you take a look at it, the interest paid for the excellent credit score, which right now the rates are at a fresh 2.875. Because of the way that bad credit is or poor credit, it's not really as easy to look up what those rates are. That's more kind of typically more, I would say, exotic lenders that would actually, fund more, poor or, very, very well below average, credit on a mortgage. But we're going to use 9.5 there. And the example there is over 30 years, that interest at 9.5 is $413,767. So the actual difference in the interest paid in those two credit ranges of the absolute best and the absolute worst is a difference of $313,017. So what you got to do, guys, is basically we're going to go over to another one, which is investor.gov. And if you go to investor.gov, what we can do is we can take a certain amount and we can plug this amount into a compound interest calculator. And what we're going to do is we're going to say, okay, what is that 313 invested at 9.8%? So what 9.8% is, that is the return of the S&P 500 over the last 90 years. So 90 years ago till now, or recently, is averaging 9.8%. So if you take that difference of the interest paid for the absolute best credit score and the interest paid for the absolute worst credit score, that difference is $313,017. So if you take that and you do a 30-year mortgage, so you go ahead and invest that money for 30 years at 9.8%, the results are in 30 years, you will have $5,171,757.21. So there's your exercise for the day. And anybody should be getting at least what the S&P 500 returns. And then also, in case you don't know, I also have a lot of investing content. I also have a M1 Investor Pie. You can invest in my Investor Pie on M1. I'll put that link below in this video as well. Okay? Thanks a lot.